Audio clear? My audio clear?
I can hear you.
Oh, okay. So before we continue, so far, do anyone have any questions so far? This is how you trade just 2 hours in a day and you're done. This is how you trade within minutes. This is how I do my trading actually. You can see when I sent the GBP card. This is why most of the times nobody gets to trade my signal because it happens very fast. It's not magic. That's because I'm following section. If I'm scalping, it happens very fast. If I'm swinging, then it takes time. Like you see the USD card, gave a reaction, it took time. But most of the times when I give a swing reaction, it's not I'm getting stopped out immediately, or price is giving me an instant reaction. This is why. Okay, so if you don't pay attention to that, you're going to miss that. So far, are we good? Now, looking
I have a question. Yeah. Sorry. Is there any indicator to separate the sections?
Sorry, come again.
Is there any indicators to separate the sections?
To separate the sections?
Yeah, the color. Or is that how it is in the trading view?
No, this is an indicator. Trading view will make it this easy for you. This is an indicator. If I remove the indicator, it looks like
this.
Okay,
what is the name?
It's called
okay. What is the name of the indicator?
Let me this is the indicator. ICT kill zone sections in Nigerian time. I don't know who created it, but I'm guessing it's a Nigerian because it helps you identify these stuff in Nigerian time. When you tap it, it just pops up.
All right, thank you.
Yeah.
Okay, thank you.
Then if you want to see this period separator, it's a settings on trading view. Just go to setting. You see section breaks. If you tap it, it's out. So it looks like this. But if I tap it, this is mainly when I want to trade within the day. Let's say I'm trying to just scalp or get 50 to 100 pips in the day. I'm using the section breaker. So let's continue. Yeah, you're welcome. Now looking back at this, let's put this back. Now, what do we see? Using this, we understand that there's a possible POI here, because now we have seen price did clear liquidity, right? And then book structure. So at this point, based on this previous created range, we should be bearish, right? So let's say, do we have any POI which price could be reacting from? Yes, there's a break, there's a clear of liquidity here, there's a break of structure here, and price is mitigating a strong high. At that point, how much of a coincidence that price is mitigating a strong high and at the same time clearing out an external range liquidity within the internal range, which is now inducement to this, and at the same time mitigating that at the opening of New York section. This is like enough confidence for you to want to sell from this point. If it's for me, this is why I would now want to go in on the sell. If it's what my wicks though, let's say how many pips SL? Calculating as 100, it should be 34 pips. On NAS, my maximum lot for SLs is 50 pips. So I'm reducing my wicks. I'm going on 0.25 lots on a 10K account to ride price back down. Let's say not to clear out this low completely, but let's say to mitigate this point, because even if we're going to have a reaction, it should be either from here or this one below. But I would definitely bet on this one below, because this should be inducing this. This is an eternal low. All right. So you see how simple that is. You don't even have to wait for too much confirmation. Section, strong high, section, and SMC as one. Timing. All right. This is where timing comes very, very important. Before I was taught about timing in my trading, it took a lot of training on structure alone. That's why I say if this is sounding complicated or new to you, there's no need for you to be confused. There are other videos on sections, just stick to them. And when other videos on structure, And when you feel like you've understood structure, because clearly if you know how to identify strong highs, weak lows, swing highs, then this I'm showing you should be amazing and lovely to you, because it will just help you boost your confidence in your intraday trading. Okay, so this would ease that stress of over trading, because that's one of the reasons why we fail, we overtrade. So if you know there are particular time in the market where price mitigates POI and then gives a significant reaction, why not trade only at that particular time? You see, so it helps you ease that stress and keeps your mentality in check, which is mainly what I said at the beginning of the topic, that today's section is more about other ways you can analyze the market outside technical analysis that could ease the stress. If you understand that this is a significant point in time when price gives a significant reaction on this particular pair, understanding section, what do? You can even do this to see how much is the risk, if it's what's your risk. 29 pips. What's the first target? This liquidity zone, which is about 137 pips, 132 pips. Which rides us to the end of the day. And we're done. All right. So now this closes Asian section. Well, I don't trade Asian section, so it's none of my business. So it's also a significant point in time, but I don't trade Asian section. Right. If I do trade Asian section, then this would have been my kill zone. Okay. So since I don't trade that, that's when I'm done trading. Okay. So I'm coming in at this point in time, which is 10 a.m. to 11 a.m. Nigerian time. Now, what do I see? Price is just cleared out a significant low, which was a strong low. Now, if a significant structure is broken, what happens? When we see a significant structure being broken, what happens? We expect a pullback. Am I correct?
Yeah.
Now, if we're expecting a pullback into this range, what's the first thing we do? We understand the premium and discount of the range. Now, understanding the premium and discount, what do we see? We have a strong high that cleared the previous low that created it to form a new low, and at the same time clear that liquidity within premium of the swing range. What does that gives us? A point of interest, which is this. Right? So, but at the same time, what did we say we were expecting from here? Remember, we're coming into the market from here, right? Which means we're expecting a pullback. We want to see price retracing back into this POI, right? Which means we're bullish. For that day, we should be looking for buys. You guys understand why I'm looking for buys from here, right? Using structure, you guys remember, Yes. Please follow up. Let me know that I'm talking to human beings.
Yeah, because we cleared the strong low. It broke
Yes.
a strong low.
It broke a strong low, which means there's a break of structure. Means we're expecting price to return into the range to give us a POI. Okay. So we're expecting a pullback. Means we're bullish. Now, what do we see? At this significant point in time on that particular day, price pulled back after clearing out liquidity. Now, what do we have there? Fair value gap. The price is mitigating a fair value gap. All right. So if we see a pullback, what's the trade? We take it from here. So now let's go to the lower time frame and see if price did give an entry from that point. Let's hope the price action is there. Okay. So you see this? This was the opposite supply, which was supposed to clear the previous low, right? But what happened? We had a change of character. Price created another block, which this guy created this guy, which failed to break this low, then created a strong low. right? Because this guy now cleared this. So if I was to be trading this right now, let's say I don't trust this other block. Let's say I don't know if I should trust this other block. But remember my lower time frame pattern on the last video I posted on YouTube. One of my lower time frame entry patterns on SMC. You see this. Once it's broken, since it's on the lower time frame, I observe the range. On anything below the 50%, I'm looking to buy. And luckily, we have my other block resting at that same point. So it means this is a clear entry. I could just have my limit placed here. And this is an entry. So, which means within New York section, I did get an entry from this point to take me here. And at the end of New York section, what do we have? There was a pullback, but Asian section, why they trade into take profit. Now let's go back to the 1 hour time frame. We have this. That was our entry. Okay, we did aggressive on this, aggressive on this. Why did we do aggressive on this? Why were we aggressive on those situations? Why didn't we go on the lower time frame? Do anyone have a very simple reason why we did not go to the lower time frame on the first two trades? Anyone?
Higher time frame market structure?
Yeah, that's correct. Nice one, bro. Because of this, the higher time frame structure was reacting from a strong high. All right, so and at the same time, we had price mitigating our POI within the Q zone, which we understand at this point, at let's say 70 over 100 gives momentum reaction. And this happens to be mitigating a significant POI. Why clearing out an external range liquidity? An internal range liquidity, sorry, which is also an inducement to this POI. So which means these are strong confirmations to a POI. All right, which was one of the reasons of weight bearish in this without any confirmation. But I can give you a guarantee that if we go on the lower time frame, we would see that entry pattern. You can do that yourself. Mark the date of this. This was the 18th of April. You can do that as a personal study. Go to lower time frame and see if you had any lower time frame confirmation on this. Now, the reason why we didn't go on the lower time frame of this was the same thing. Kill zone, mitigating a POI while clearing out liquidity. A significant POI. All right, this is enough reason for me to want to risk my money into this, which is why I did not go lower. Now, why didn't I go lower on this? I do not trust fair value gap on POIs. If it's a POI and it's a fair value gap, I do not trust it. Why don't I trust it? Because clearly this can fill any part of the fair value gap. Right? This can decide to fill 100% or just the opening, whichever point of the fair value gap it likes. So I like to get a lower time frame confirmation to be 100% sure on my entry before taking an entry from a fair value gap. Right, so I want to be very, very sure is what's my risk before I take my trade from this. This is one of the reasons why I went to lower time frame, not because I can't go aggressive. I can decide to go aggressive on this, but that's who is willing to risk his money on sorry, that's the wrong one. That's who's willing to risk his money on aggressive on fair value gap. You can do this, but I don't do something that stuff like this. Fair value gaps are tricky to me, so I don't do that. Now, what happened on the next one? What do we see? Price mitigated our POI, and I gave a reaction, broke structure into the next day. Let's say we were just trading just in the London, New York section. Like this is how I trade. You guys know me. When I'm trading, I'm either trading New York close or New York opening, right? And now on New York close, what do we see? Price mitigated our POI, which means this is an entry as well. And if I was still trading on that day, let's say I wanted to go in twice, I would have sold from here. But if this was enough, I would have been done because this was over 137 pips, risking on 9.8 pips, I guess. It's really difficult to calculate how many pips now. Okay, 19.4 pips. That's giving us 137 or 27. 37, 37 pips. So now we had a reaction from this Witchbox structure. So everyone understood what I was saying, right?
Yep.
Yes, sir.
All right, let me ask my own question there.
Okay.
Let me do this.
Okay.
Don't expect it to be easy. You know me, I'm always very tricky. So let's say we had something like this. Let me pick this out. Let's say we had this structure, all right? And then we had a high time frame POI right here. And price mitigates this, and it starts to go back down from the high time frame POI. And then we also have a lower time frame POI, and price mitigates this within New York kill zone. And you are a kill zone trader. What would you do? Knowing that price could be slashing down this, or price could be going this way. What would you do in such a situation? Knowing that this is also having section mitigates this at the same time. What would you do? Would you follow structure and not take the trade, or would you go with section and take the trade?
I'll follow structure.
Who's that? So let me observe. Who says you follow structure?
Progress.
Okay, Progress said structure. And who again? Anyone?
If the POI is from the higher time frame, I would rather go for the structure rather than the keystone.
Okay. I thought this actually in today's section. So this is a question from one of the teachers in the section. So if you pay attention or if you're very, very, very observant of what was happening, you will know what I said in such a situation. Nice one, Big Sis. Big Sis just answered the question. He said, I will take a buy to the closest supply zone to a sell. That is the truth, actually. Why say so? Because one, I said section, right? Section mitigation. Two, I said lower time frame POI. Remember, section is not for swing trading. This is a swing POI. Right? Section is just giving you what is happening here, what is happening here, what is happening here, what is happening here, what is likely to happen here, and what's going to happen here. There's every tendency that the opening of London mitigating, the opening of New York mitigating this will end the close of New York, mitigating the closest supply zone. So what would you do? It means you should scalp. You know, if it's what your rigs actually, not everyone. Like Progress said, Progress is also correct. I'll follow higher time frame. If I'm a swing trader, I'll follow higher time frame. You know, I wouldn't want to scalp because this is a counter trade, first of all. So if I'm swinging, I want to swing on the trend. But if I'm scalping and I'm trading within the day, maybe 2 hours, this is going to be a lot of time. You know, this could happen in 3 hours. It could take 4 hours, 5 hours for price to go up here. All right. So I could decide to take a buy from here if I get that lower time frame confirmation I'm looking for, you know, and buy price to the nearest supply zone within discount premium of this range. If that supply has, you know, if that supply happens to be mitigated within the opening of or the intersection between New York and Asian section, which is the Asian kill zone, if that mitigation happens to happen at that particular time, they understand that there's every tendency the price could be selling off from here. And that is the same thing, which is still correct, which is just, you know, still correct. It's still price doing the same thing, but just me looking cooler and trading everything like, you know, I'm the one controlling the market. But that's just me following what the trend has to say. Okay, so everyone was correct. Nobody said follow what section says and forget the trend. At least I know I did not pass the information wrongly because that would be very wrong. Section is the confluence. The trend is what you're trading. The structure is what you're trading. So please, if you're trading based on section, always make sure the trend and the structure is in your favor. If it's a counter trade, the trend cannot be in your favor, which means you need a lower time frame confirmation. This I just said can be jotted down, maybe when you get confused on when to use section. Okay, so this brings us to the end of today's section. If there's any question, you can say it now as we conclude today's section.